Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Risk disclaimer. True webinar house rules. Please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I'm a certified daily wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of elite wave theory. In addition to my work as an analyst, I'm also an author and educator. I wrote Introduction to Elite Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elite Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. These are the main session goals. Let me talk about macroeconomic events and data releases. I am going to cover previous week fundamental analysis. So we're going to discuss about the unemployment rate related to Australia. And next one is the German flash manufacturing PMI report related to euro dollar currency pair. So let's start with the first one. What is unemployment rate in Australia? The unemployment rate measures the percentage of the Australian labor force that is unemployed and actively looking for work. It is a key indicator of labor market strength and overall economic momentum. A lower than expected reading signals a tight labor market. It supports AUD strength and usually pushes AUD USD currency pair higher. A higher than expected reading shows weakening employment conditions. It weighs on the Australian dollar and often drives AUD USD pair to the downside. This financial data is closely watched because it directly affects Reserve Bank of Australia's policy expectations and often causes short-term volatility. Now, the event details. The previous number was 4.3%, forecast was 4.4%. The actual number we got is 4.1%. So the unemployment rate basically decreased, which is positive. The unemployment rate printed at 4.1%, well below both the previous reading and the market forecast. This result clearly signals stronger than expected labor market conditions following the unemployment news release. AUD USD currency pair moved higher as traders reacted to the positive surprise. The lower unemployment rate reduced expectations of near-term Reserve Bank of Australia rate cuts and supported demand for the Australian dollar. Let me show you the chart of AUD USD currency pair. So this is the daily time frame of AUD USD currency pair, and you can see the price action of AUD USD currency pair. It's firing up, it's going up over here. So we got a good number, and due to this reason, the price action of AUD currency pair is moving up. This immediate upside price action reaction confirmed that the market was positioned cautiously ahead of the financial data release and was forced to reprice quickly once the data was published. The unemployment number dropped from 4.3% to 4.1%, shows that the Australian labour market remains resilient despite high interest rate and slowing global growth. This reading suggests that hiring conditions are still firm. It also indicates that the Australian economy is observing restrictive monetary policy better than expected. As a result, the Reserve Bank of Australia easing expectations were pushed further out. This shift provided fundamental support for the Australian dollar. The actual outcome matched the bullish scenario. Okay, and we got this 4.1%. The forecast was 4.4. The previous number was 4.3. So the 4.1% number, that scenario played out uh, well, whereas the expectation was a 4.4. And due to this good number, due to this positive number, the price action of AUDUSD moved up following the news announcement. Now, the key drivers behind the AUD-USD currency pair move is a clear deviation from forecast and previous readings. So 4.1 is not even near to 4.4, the forecasted level or even the previous reading. So what we got is an improved labor market confidence in Australia, short covering and repositioning after the surprise, and thin Asian session liquidity amplify the move. Even a 0.3% surprise was enough to trigger a strong reaction due to the policy implications. The upside move in AUD-USD currency pair reflected a short term, I would say, sentiment shift from cautious to bullish. Forex traders responded quickly as the data challenged existing expectations. Follow through potential depends on upcoming Reserve Bank of Australia communication and US economic data. Without confirmation, gains may consolidate rather than trend aggressively. So this was the kind of a bullish breakout, and as of today, the price action of AUD-USD currency pair is moving up. This was a gap in market. Let me see if I could. Here it is. This is where we got the gap in price action. So we might get a possible top and a drop in market. Price action may try to fill the gap and then resume the uptrend. That's also possible. So the key takeaway is Australia's unemployment rate surprised to the upside at 4.1%, signaling a strong and resilient labor market. This outcome supported the Australian dollar and pushed the AUD-USD currency pair higher after the financial data release. The data reduced expectations of early Reserve Bank of Australia rate cuts and reinforced the importance of labor market strength in shaping the AUD direction. Final key takeaway is Australia's labour market remains stronger than expected. The bullish AUD-USD currency pair reaction confirms the forex market sensitivity to Reserve Bank of Australia policy signals. Currency traders should continue to monitor employment data, Reserve Bank of Australia commentary, and US dollar strength to assess whether this move develops into a sustained trend or remains a short-term reaction. The next one is the German flash manufacturing PMI. Now, what is German flash manufacturing PMI? The German flash manufacturing PMI measures business activity in Germany's manufacturing sector using early survey responses. It tracks output, new orders, employment, and business confidence. A reading above expectations supports the euro and usually pushes the euro USD higher. A weaker than expected reading signals ongoing contraction pressure and can weigh on the euro. Since Germany is the largest economy in the eurozone, this release often influences overall euro sentiment and causes short-term volatility. Now, the previous number was 47.0. That was the PMI number. Forecast was 47.8, and the actual number we got is 48.7, which is a positive number. The PMI printed at 48.7, well above both the previous reading and the market forecast. Now, if you take a look at a price chart of euro dollar currency pair, you can see that euro dollar is firing up over here. So this looks bullish. And the way I see, I think euro dollar is probably going to rise up even further. Following the release, Euro USD currency pair moved higher as Forex traders reacted to the positive data. The stronger PMI reduced immediate growth concerns and improved confidence in the Eurozone's largest economy. The bullish price reaction confirmed that Forex markets were positioned cautiously ahead of the financial data release and were forced to reprice once the data exceeded the expectations. The jump from 47.0 number to 48.7 number suggests that German manufacturing may be approaching a stabilization phase. So it is near to 50 number, 48.7, it is almost near to 50. While the sector is still in contraction because it's still below 50, but it's somewhat getting closer. So that's a positive number. While the financial sector of Germany is still in contraction, the pace of declining is slowing. This improvement points to better demand conditions and improving business sentiment. It also reduces downside risk for the Eurozone growth outlook in the near term. As a result, the euro benefited from renewed optimism, even though full expansion has not been reached. Now the PMI that we got is 48.7. So that's a good number. It exceeded the forecast and the previous number. So this number signal a stronger than expected improvement and support euro strength. This scenario played out as expected, and the forecast was 47.8, which was greater than the previous number, but we got a surprise and to the upside at 48.7. So due to this reason, the price action of euro dollar actually moved up over here. Okay. The key drivers behind the euro dollar currency pair move is the strong deviation from the forecast, improved manufacturing momentum signals, reduced immediate growth fears in Germany, and short covering and repositioning by forex traders. The PMI data often triggers sharp moves due to its forward looking nature and policy implications. The upside move in euro dollar reflects a short term shift in sentiment towards the euro. Forex traders responded positively to signs that German manufacturing conditions are improving faster than expected. Further upside will depend on whether upcoming Eurozone PMI and ECB communication confirm this improving trend or not. So the Germany's flash manufacturing PMI surprised to the upside at 48.7, and signaling a meaningful improvement in manufacturing conditions. While still below the expansion territory, the 50 number, the data reduced downside risk and supported the euro. This financial data release reinforced the importance of German economic data in shaping euro sentiment and driving euro dollar short term moves. The final key takeaway is the German manufacturing is improving faster than expected, and that is the reason we got a good number 48.7. Forex traders should continue to monitor upcoming Eurozone PMIs, ECB guidance, and US dollar strength to determine whether this move develops into a sustained trend or remains a short term reaction. Okay, next we're going to discuss about uh, global market trends, and I'm going to talk about euro dollar and US dollar Swiss franc currency pairs. Let's go over to the chart of euro USD. As far as the euro dollar chart is concerned, the way I see the price action of euro USD is moving up, and I expect further upside in euro USD currency pair. Now, regarding the US dollar Swiss franc price action is going down. This looks like to me we got a nice bearish trend going on over here. And draw a trend line. So the weekly trend is down. It's a bearish trend. And if you take a look at the daily time frame, it's also going down over here. The gap over here basically suggests that market is going down with a good momentum, but maybe after a few days time we're probably going to get a bottom, and market is going to rise up to fill the gap as well. So it might take a few more days, but the overall trend is still down in USD Swiss franc currency pair. Next, let us take a look at current week macroeconomic events and data releases. I will be covering the key developments in Forex market with a focus on fundamental analysis. The first one is the Tokyo Core CPI related to Japan, and we're going to focus on USDJPY currency pair. The next one is the GDP month over month related to Canada, and we're going to discuss the USD-CAD currency pair. So these are the upcoming financial data news that we're going to discuss. Let's start with the first one, Tokyo Core CPI. Y over Y means year on year. So what is Tokyo Core CPI? Uh, Let me first explain that. The Tokyo Core CPI measures year-on-year inflation in Tokyo, excluding fresh food. It is widely viewed as an early signal of nationwide inflation trends in Japan. A higher than expected reading supports the JPY and often pushes the USD JPY lower, as it strengthens expectations of further policy normalizations by the Bank of Japan. A weaker reading suggests easing inflation pressure, which may weigh on the JPY and drive USD JPY higher. Due to its forward looking nature, this release frequently triggers short term volatility in Japanese yen pairs. Now, the previous number we got was 2.3%. The forecast is 2.2%. The actual data not yet released, but it is going to be released on January 29th. So today is January 27th. So after 2 days time at 11:30 p.m. UTC time, we will get this financial data release. The inflation trends in Japan remain a key focus for forex markets as the Bank of Japan gradually shifts away from its long-standing ultra-loose monetary policy stance. Recent data has shown signs of stabilizing inflation, but uncertainty remains around whether price pressures are strong enough to justify further policy tightening. The previous reading of 2.3% indicated inflation remained above the Bank of Japan's long-term target, while the forecast dipped 2.2% suggests expectations of mild easing. Forex market sentiment toward the JPY is cautious, while I would say Forex traders highly sensitive to any inflation surprise that could influence Bank of Japan guidance. Now I'm going to discuss a scenario over here. If Tokyo core CPI prints above 2.3% number, this would signal renewed inflation strength. JPY could strengthen as expectations of further Bank of Japan normalization increase, potentially pushing the USD JPY lower. Now let me show you the chart of USD JPY. It's already going down. This was a break to the downside. Here's a breakdown over here, and the way I see USDJPY is probably going to hit the next trend line over here. So that's the next support. this is where we got the breakdown. So the way I see market is probably going to drop even further. If the core CPI prints near 2.2%, this would confirm modest cooling in inflation, and price action may be limited, and we might get a sideways looking, market is probably going to move sideways. And if Tokyo CPI prints below 2%, this would suggest faster than expected disinflation, and JPY may weaken as expectations for Bank of Japan tightening fade, potentially driving USD JPY to the upside. Now, the key drivers to watch is the deviation from forecast and prior reading, underlying inflation momentum, Bank of Japan policy expectations, and communication. And also take a look at the US Treasury yields and US dollar strength overall. Even small CPI surprises can generate sharp moves due to the policy sensitivity of the Japanese yen. So USDJPY price action ahead of the release reflects cautious positioning, with forex traders awaiting clarity on Japan's inflation outlook. Volatility is likely around the release time, especially given thinner Asian session liquidity. False breakouts and quick reversal are common during Japanese inflation release. So the overall analysis and key takeaway is the upcoming Tokyo Core CPI year-over-year release is expected to show a slight moderation in inflation to 2.2%. While inflation would remain above the Bank of Japan's target, any meaningful deviation could quickly shift expectations for future policy expectations, for future actions as well. This release remains a key short-term driver for Japanese yen sentiment, and the USD JPY next direction depends on this release as well. Forex markets are watching closely for confirmation of Japan's inflation trend. USD JPY reaction will depend on whether the data reinforces or challenges Bank of Japan policy expectations. So Forex traders should be prepared for increased volatility and assesses both the headline figure and broader market conditions when interpreting the price action or price reaction right at 11:30 p.m. UTC time on 29th January. The next one is the GDP month over month related to Canada, and we are going to focus on USD CAD currency pair. Now, what is the GDP month over month? The GDP month over month measures the change in Canada's economic output. It reflects the overall pace of economic growth and captures activity across major sector of the economy. A stronger than expected reading supports the CAD and often pushes USD CAD lower. A weaker reading signals slowing growth, which may weigh on the CAD and drive USD CAD higher. As a key input for Bank of Canada policy decisions, this release frequently influences CAD sentiment and short-term market volatility. Now, the GDP number that we got previously was 2.3%. The forecast is 2.2%. The actual data, is not yet released, but it is going to be released on 30th January at 1:30 p.m. UTC time. Canada's economic outlook remains closely tied to domestic demand, energy prices, and global growth conditions. Recent financial data has suggested some moderation in economic momentum as higher interest rates continue to affect consumer spending and business investment. The previous GDP reading of 2.3% reflected solid economic activity. The forecast slight decline to 2.2% point to expectations of mild cooling rather than a sharp slowdown. The market sentiment toward the Canadian dollar remains sensitive to growth data, especially as forex traders assesses the timing and pace of potential Bank of Canada policy adjustments. So, if the GDP month on month prints above 2.3%, this would signal stronger economic momentum, and CAD could strengthen as expectations for sustained restrictive policy increase, potentially pushing the USD CAD lower. Now, if you take a look at a price chart of USD CAD currency pair, it's already going down. This was my forecast, a pullback to the upside, and then a drop in market, and this is what exactly market is doing right now at this point in time. The key market drivers to watch is the deviation from forecasts and prior reading, sector level growth details, and Bank of Canada policy expectations. Some forex traders also watch the crude oil prices and commodity trends as well to get an overall US dollar direction and risk sentiment. The GDP data often influences forex markets due to its direct link to monetary policy outlook. The USDCAD price action ahead of the release reflects cautious positioning, with forex traders awaiting confirmation of Canada's growth trajectory. Volatility is expected around the news release time, especially during the North American session. Sharp initial moves are common if the financial data significantly surprises expectations. So expect short-term volatility around the release time around 1:30 p.m. UTC time. And we might see directional moves, and that directional move, I would say, depends on the surprise magnitude as well. Uh, so risk management remains essential during the initial reaction. The upcoming Canada GDP month-over-month release is expected to show a slight moderation in economic growth. While this would still indicate a stable economy, any meaningful deviation from expectations could quickly shift CAD sentiment and USD CAD direction. This release remains a key driver for short-term CAD price action. So forex markets expect modest cooling in Canada's economic growth. USD CAD reaction will depend on whether the data confirms expectations or delivers a surprise. So currency traders should assess both the headline GDP figure and broader market conditions when translating post-release price action. Next, let us take a look at current week global market trends. Let's take a look at euro dollar and USDJPY currency pair. Regarding the euro USD, the trend is up. This is the weekly chart. Market is going up over here. Nice uptrend in daily time frame. This was the breakout, then a retest, and market just simply rallied up after that. If you take a look at a 4-hour time frame, you can quickly notice that price action just keep printing higher swing highs and higher swing lows. So there's a nice uptrend going on inside euro dollar currency pair. Next one is the USDJPY. Daily time frame, we got this break to the downside. If I zoom out a little bit, this is the weekly chart. So we got a kind of a false breakout over here. And if we go over to the 4-hour time frame, price action clearly shows 1, 2, and 3 wave to the downside. So the way I see it looks pretty much bearish. We might get a pullback, or maybe market tries to fill this gap over here. But overall, I would say the trend is still down in US dollar versus Japanese yen trading instrument. Next one is the US dollar versus Canadian dollar. USD CAD currency pair price action is falling down in daily time frame. And the way I see, if we go over to a 4-hour time frame, still a bearish story. So price action just keep printing lower swing highs and lower swing lows. So the way I see, market is probably going to drop even further. Last but not least is the XAUUSD pair, the spot gold. So let's take a look at gold chart. Gold is actually going up. So here's a chart of spot gold. It hit the 5,000 level. It looks quite bullish. And that's the weekly chart of spot gold. Let's take a look at a daily. So daily time frame, same story. It's an uptrend going on inside spot gold daily time frame. Okay. So the way I see, the trend is clearly up in spot gold. Okay, if you guys have any questions, feel free to type inside the chat box and I will be happy to answer your questions. Yes, as far as the silver is concerned, let me show you the chart of spot silver. The silver must be bullish as well because the gold is going up. So yes, here it is. Spot silver is also bullish. This is the monthly time frame. We go to a weekly chart. Same story. Nice uptrend going on in spot silver. This is the daily. So a good idea is to wait for a pullback, and then market is probably going to rise up even further. It's not a good idea to jump into the market at the current price. A good idea is to wait for a retracement or a pullback. You could use a Fibonacci retracement level as well. Okay, like you can draw the Fib level over here. I'm going to change the color. So you can wait for a pullback, uh, and then look for a potential a buy trade setup somewhere over here. Okay, the trend is clearly up in silver, but market never goes up in a straight line. You always get a pullback. Okay, that's pretty much it for the time being from my side. So what you have learned today? Well, we discussed about the Tokyo core CPI related to Japan, and we also discussed about the GDP month over month related to Canada. These are the forex pairs that you need to watch out for profit: euro dollar, USDJPY, USDCAD, and spot gold. These are the assets to watch out for profits. What you should do next: stay tuned for the schedule of next week's trading webinar. Subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. And if you want to learn more about trading, visit TradeGeek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar, Tuesday, February 3rd, 2026, 12 p.m. UTC time. So that's pretty much it for the time being from my side. Have a nice day, and bye bye.